All right, good morning, everybody. So we're joined by Phil Flynn of the Price Group and Fox Business. How are you, Phil?
Hey, I'm doing great today, Michael. Boy, I'll tell you, it's been a kind of a big way to start the week with the Mexican-U.S. trade deal and everything else. But I'm doing great. Exciting time to be in the markets.
Yeah, well, on that, it definitely is exciting. We had a big day yesterday. Equity markets were closing at basically all-time highs, and as you pointed out, there's a lot going on with Mexico, and there was a farm bill passed yesterday as well. A lot of interesting things coming up over the next few months. Definitely setting up for a very interesting September and Q4. So, what are your thoughts on the energy market here?
I continue to believe that we saw the lows for the year a couple weeks ago when we double bottomed here, and I think the outlook looks very strong. And with the U.S. Mexican trade deal and the preponderance of the fundamentals, I'm having a hard time finding anything bearish to talk about right now. I mean, if you look at the reports that we saw from OPEC yesterday and their conference call. We're seeing the compliance to production cuts still up around 120%, which was better than expected. We're hearing from China that their teapot refineries are back to buying oil. And if you remember a few weeks ago, Mike, everybody was saying, oh my gosh, yeah, China imported a near record amount of oil, but the little refiners stopped buying. Well, that really changed yesterday. There was a report that the Chinese small refiners were back in the market, which is another sign that the so-called trade war with China may not be slowing down oil demand as much as anticipated. And then, of course, you have a bigger situation with the raging stock market breaking all-time record highs. And I don't know about you, Mike, but if I'm running a business and it's doing really well, generally, depending what type of business it is, I'm usually using a lot of oil, right? Even if I'm traveling from one place to another, if I'm moving goods from point A to point B, a strong economy is generally good for oil demand. So I think that's a sign, the strong stock market, that some of the lowering demand expectations for oil may have been overstated, so the demand expectations will rise. Add to that some type of deal on what was formerly known as NAFTA, which is now the U.S. trade. NAFTA is a dirty word now. You remember that? President Trump told you that.
Trump got rid of that one.
Yeah, bad. Don't say that word. Not a mixed company anyway. But yeah, and so we've got a new deal, and that's potentially very bullish. If we get Canada to come to the table, and we get a deal, it's going to also raise the stakes on China to come to the deal for trade. And President Trump definitely is using this deal with Mexico as kind of a trump card to say, hey, China, we're kind of in a deal over here. We're not really in a hurry to be talking to you because we've got bigger fish to fry in North America.
Well, let's follow up on that with the deal yesterday with NAFTA. So it seems like step one is he wants to pressure Canada next, and then, like you said, possibly leverage that with China as well. But what are you hearing as the next step with Canada?
We're hearing that they want to come to the table. They don't want to be left out of this agreement, and they are feeling the pressure of a pretty good deal. And I think President Trump made a pretty good deal. He said, hey, this is really a good deal for both countries. And I know a lot of the critics of President Trump from the other side of the aisle that were saying, hey, a trade war is bad, even some on his side of the aisle. He seems to be getting some major concessions from Mexico that may actually help the U.S. auto worker, help the Mexican auto worker with higher wages, more trade. And so I think it's, everybody was saying, hey, we hate trade tariffs. We hate trade wars. There's no winners in a trade war. Well, it looks like we're starting to see winners, or at least a leveler trading playing field, which I think is going to be very bullish potentially down the road, because I think free trade is actually going to increase growth. We're already seeing signs it's going to increase wages. And so I think that at the end of the day, maybe there's no winner in a trade war, but there are winners if you do break down trade barriers and level the playing field.
Yeah, yeah. And what about the farm aid bill that was passed yesterday, giving subsidies to farmers that have been
I,
hurt by this trade deal or the
I
threat of
I
it?
think it's good. I think the farmers are very happy about it. I think the only criticism I heard was that they were going to cap the amount of money paid out per individual at $125,000 because there's some of the larger farmer operations that have probably taken a bigger hit than that, and some thought that that number could have been larger. But in general, it's I was just kidding around. It's like Farm Aid without Willie Nelson, right? Willie Nelson did the first Farm Aid, but they're coming down right now to get us over the edge, and it does. It's what's nice about this is that it is going to be kind of a short-term, stopgap to get us over the edge until these trade deals are consummated. We already know that President Trump has said that the Mexicans are going to up their purchases of U.S. grains. They're going to up their purchases of U.S. pork, U.S. Beef, and other agricultural products. So hopefully the boom from this deal will actually increase the amount of U.S. Exports of
Well,
agricultural countries.
he did
Yes.
point that out yesterday, but that's one area that I wanted to kind of get with you is if you take a look
Mm-hmm.
at actually the prices of corn, wheat, soy, they've had no effect, and if anything, soy continues its move lower. We're right now at 827.5. It's down about 1% today, and we're basically at the low of this move over the past number of months, which has been pretty painful for the ag land.
Yeah, and I think the problem is not so much the Mexican trade deal. I think prices might have been further down if they continued the trade war. The problem is the size of the crop. I mean, if you talk about the U.S. soybean crop, we're going to have the biggest crop we've ever had in this country. I was talking to farmers in downstate Illinois. They think their yield per acre when it comes to soybeans may be the highest it's ever been in 135 years. Some people are getting record yields. And despite the fact there's certain parts of the country that have had problems, we're going to have a huge supply of grains. So I think that's why we didn't move the needle too much. When it came to the deal, we did see corn get off the lows a little bit. We did see the soybeans, but at the end of the day, you still have to overcome the size of a record crop, which is going to pressure prices anyway. We've had really good growing conditions here in the United States in most of the areas, and the early crop chewers that we're hearing, some of these yields and bushels per acre are going to be really, really high. So you can't overcome Mother Nature in a record crop. But I would tend to point you towards the hog market, which we saw.
Well, I just brought up a chart.
Up.
I just brought up a chart of that off the beaten path. You wanted to discuss that. So what's the story in the hog market?
Well, I think one of the things is that Mexico is going to be a major importer of U.S. hogs and pork. And at the same time, guess who's going to be a big buyer of U.S. pork as well? Our friends in China. And you're saying, well, China, what about the trade war? What about the tariff? Well, at the same time, there is a story about Asian swine flu that is really decimating the China hog crop. In fact, they've had to cull thousands of hogs, and there's signs that this Asian swine flu could be spreading, maybe even outside the borders of China. And there's a growing concern that they're going to have difficulty containing this virus. And while it's getting some press here in the United States, there's been this perception that it's going to stay separate. At the very least, it is going to increase the probability that China is going to have to import a lot more pork from the United States. But it also raises the possibility that this could be a situation that could be as serious as the PED virus that we saw in the hog market years ago. Now, people don't remember the PED virus. That's when, of course, hogs went through the roof based on a disease that really impacted only small hogs. baby hogs that had to be killed, where it didn't really impact the more mature hogs. This Asian swine flu, on the other side, has more of a tendency to affect the entire herd, which could be a major problem when it comes to supply. So not only are you going to have China having to import more hogs, they're going to have to compete in the U.S. market against Mexico, who is going to up their hog purchases. Now you add Canada to the mix. If we get a deal with Canada, a North American agreement, it's going to give us a really powerful base here in North America to raise the pressure on China to come to the table. So potentially what we saw with Mexico yesterday and the hog market could be indicative of what we're going to see in some of the other ag markets as we go forward.
Yeah, well, I'm just bringing up the chart so everybody can see it's on the right-hand side, and that's had tremendous volatility. Over the past 2 weeks, we've traded down below 48 and then above 60, and then even just in the past like 6 or 7 days, I mean, we're moving about 10% every 2 days. So that's definitely something to keep an eye on. A lot of volatility, a lot of headline risk, it seems like there.
Right. Now, the other thing we were talking about last time we were talking, Mike, was the natural gas and how we felt that was going to see some downward pressure. And we've really seen that start to come to fruition over the last couple of days. We're getting close to the end of the cooling season in natural gas, and our production is going up. And in another Mexican connection here is that Mexico, of course, is a major importer of natural gas. And the producers in the U.S. have been building new pipelines, raising production to feed Mexico's rising natural gas consumption. One of the issues that we've had with Mexico is that they were going to build a lot more nuclear-powered power generation plants in their country, some of which have been delayed, which is actually giving the market a perception that we're going to see a bigger glut of natural gas as soon as we turn off our air conditioners. So we really have seen the mood of the market change in natural gas from one that was being supported by record demand to one that might be overwhelmed with record supply in just a short period of time. So we're really seeing the psychology of this market change, and we might really be surprised how hard we can hit this market over the next couple of days.
Yeah, well, it looks like we have been keeping a close eye on natural gas, and I brought that chart up as well because we've been looking at that pretty closely with Bryn Kelly and Mark Fisher. And it was holding up pretty well around that 295 level, and it ran some stops, and now here we are at 283. Just in the past 3 days, basically, we've had that entire move. We got near the $3 level, couldn't take it out, and here we are, 283, about 15 cents off that high. So that's definitely something interesting to monitor. What about on API? Let's finish up with that. I guess we're coming out with that data at the end of the day. What are you looking for there?
You know, we're given a wide variance of guesses on this report. And, the normal sources that I show actually we were expecting a build across the board, whether it be crude oil supplies up 2 million, gasoline up around 2 million, distillates up 2 million, and actually our first drop in refinery runs that we've seen from record levels of about a percentage point. But then I'm getting headwinds from some other places that are saying that your normal numbers are a little bit off. So the other sources that I'm talking to, some of which are very credible and done a very good job, we have this crude build anywhere from a build of 3 million to some sources saying a drop of 6 million barrels. Now, you would say, hey, 6 million barrel drop, it doesn't seem to add up. But if you remember a couple of weeks ago, we had that incredible build that didn't seem to add up either. And then it was corrected the next week. And there are a lot of people that feel that incredible increase that we had in supply 2 weeks ago still hasn't been adjusted into the market. And so that's why there's an expectation by the people calling for this big draw of 6 million barrels that, we're going to see a big surge in imports a big drop in imports, a big surge in exports, and the market playing a little bit of catch up with the market going back down over 6 million barrels. As far as the Cushing, Oklahoma number, we did see reports from Genscape that number was going to be up over 700,000 barrels, almost 800,000 barrels. But late data from Genscape yesterday seemed to suggest that for the bulk of the week, supplies were going up, but over the weekend, they started to draw again. That drawdown in supply might be a signal that the people predicting a bigger draw may have something going for them, because a draw in Cushing after a big build might suggest that the U.S. refiners are still running at record rates. So if we do get a number where we are running at record rates, if we are indeed seeing signs that the exports are higher than expected and the imports a big drop, then that 6 million barrels, as crazy as it sounds, that drawdown might not be off the table. But that's why we're going to have to buckle up and wait to see, because I think this is going to be a tough one to call this week. But I will say this. If we do get that 6 million barrel draw and we don't see a huge build in products, then we probably will see $70 before we leave for our Labor Day weekend when it comes to crude.
Interesting. We'll definitely keep an eye on that. So we've dated today at about 4:30 Eastern Time API. Then tomorrow, 10:30 a.m., we get the Department of Energy results. Phil, thanks a lot. A lot of great information. I appreciate taking the time.
Thank you, sir.
All right. Talk soon.